Good morning, everybody. Today is Wednesday, the 4th, and we have some big news today. Some, some of the biggest news that we've had since the holiday, and that's just the FOMC meeting minutes. Um, that should potentially cause some volatility in the market. And there, the euro has been moving up slightly, or having a pullback um, since yesterday, really. Um, and it did push down pretty low. Then we saw this candle here that was 44 pips, and the wick of this candle was 44 pips. Uh, that level was pretty strong. The chart doesn't look correct on my broker right now. My chart's a little bit messed up, so I'm going to show you what it looks like uh, on FX Choice. So, well, this is what we are looking at now, and it's the Euro US dollar is displaying correctly. So this level was the last level of support, and it did hold here. Now, initially, before I closed my stream yesterday, I was pointing out to you guys that there was an inside candle here, and then there was initial push. Um, that was actually a fake out. We had a wick on the candle right after, false push up, and then a push back down, broke the level, and then swept back up in a big way, like a mini whipsaw on that one candle. Pretty big push. So this level ended up still holding, even with that huge push back down on it. Now, initially I said yesterday, just hours after, or like a few minutes after this push happened, I said that the push up or the pull back up would be limited to a couple levels, and I said that it was limited to 1.04332. Now this was marked yesterday, and then the next level was 1.04667. I feel like this pullback is limited to those levels, at least up until the FOMC. Now, depending on what happens there, then we'll have to see. But I do think that this 1.04667 or 1.467 is pretty strong. Now, don't be faked out by this demo account. It's just I'm showing you the Euro chart. Now, this is my live account. I did withdraw $1,600. That was a balanced withdrawal. Um, as you guys know, I did make 160 pips on the Euro US dollar back in the last FOMC statement, and decided to withdraw those profits. Okay, so today I wanted to talk to you about the news uh, and what's coming out. Okay, yeah, this is what FX Street is saying. Euro USD and dollar in trouble. FOMC minutes will define. Um, so we're gonna see. This statement could be pretty big, guys. It could be pretty big. And I'm currently in a trade right now on the USD CAD. Now, I would expect for some recovery before the FOMC. We're only about a few hours away. I was considering actually entering a trade here, and I'll explain that later why I did not. Um, So the dollar eases on Wednesday with uneven results across the board. European currencies remain subdued, trading within early week ranges, whilst commodity-related ones are posting sharp intraday gains at trading fresh to week highs. Um, so basically, keep an eye out on the FOMC. Try not to enter too many trades before that, especially on the USD, because that could cause some issues for you. Okay, so what I'm looking at right now is the FOMC statement. It says that it's at 2 p.m. Eastern Standard Time in the U.S. Now I know that's going to be different for a lot of you, a lot of others of you. Um, but yeah, that's what I'm talking about. Don't be placing a bunch of high risk trades before that statement comes out, unless you know that you're trading through the statement and that could affect your trade in a pretty big way. Um, so tomorrow we have the NFP. Now there is potential for me to to place a higher risk trade on this, only if a specific event happens. I'm looking for the initial response to that no the NFP to push up the euro in value. So the dollar will go down, the euro US dollar will push up, and then I would expect for a pullback. Now that happens quite often in FOMC where you'll have a push up and then a big pullback after that, and then a continuation of the trend. So I'm looking for that whipsaw, and it needs to be on uh, the weakness of the USD side. So I'm unsure if I'll play it for sure yet, but we'll just have to wait and see. Um, so next, let's talk about my current trades, what I'm in, why I'm in them, and then I'll get into the previous day trades. I took quite a few trades yesterday. I'm sure you guys would be interested in seeing why and when I took them. All right, so the first trade, or my latest one, is on the US dollar CAD, and my initial entry was at this support level, and it was pretty strong to me. It was near a whole number as well. It did end up pushing up from my entry, which was here, and then hit this level and then bounced back down. So it was in a tight range here. I saw that happening and I saw it forming. Um, I actually considered taking out my position right after I saw this candle. So that would be an exit of the trade right here for a profit about 15 pips. I left it in, and I'm going to say it was a mistake, because the reason why I left it in is because I'm looking at the bigger picture here. Looking at the daily chart, you can see the daily chart. If you zoom out, it's on the uptrend side, right? It's pretty slow. It's been moving up since May 2016. It's been pretty choppy on the way up, but there also been pretty good higher lows this whole time. I'm hoping that there's one here, but we'll have to wait and see. And so I took the trade based on the bigger picture. The FOMC could slow things down. Now, right now I'm holding, and that's the reason why I'm holding is because of the trend on the longer time frame. That was why I left this in. Now, the mistake came in because I forgot about the FOMC that's happening later today. Now, I would have for sure, if I would have remembered, like a good trader should, that the FOMC is coming out, then I would have closed this out when I thought was necessary up here for just 15 pips profit. So the FOMC changes a lot because it's a pretty big news statement. That means that if I'm on the negative side of this, so if I'm on the negative, and I'm actually trading this on the longer time frame, I could see this pushing down during the FOMC all the way down to here at least. That's possible, especially if the USD, the FOMC, uh, it, puts on a grim outlook of the USD. It could push down potentially hundreds of pips, um, pretty quickly. So where it is now, that's a 227 pip move, and that's very possible today. And that would be really unfortunate. I do think that this is a pretty good support for the uptrend for it to continue. I would enter. I have a pending order set here, just in case, and then I probably will put another pending order depending on how volatile the market is all the way down here. So that will put in a fourth order. Now I'll be in pretty deep at that point. Um, but I'm prepared for it. I have a strategy, I have a plan, and to work with it. Now, Depending on what this level is, I may take a loss if it does break past it and it's starting to look a little less positive that this potential uptrend, this big uptrend that I've been talking about, could start to crumble and move on the downside at once this level is broken in a big way, and I could close out for loss at that point. Um, so where's my trade? Oh, there it is. Okay, so what I'm doing here is I was considering entering a third position here, but that's only 30, 40 pips away from my second order. Yeah, 30 pips. So my first order, so you guys know, is at 1.336, and my second order is at 1.34284. And that is a 67 pip difference between the two. Now, you know why I took my first order, but you don't really know why I took my second. So I'm gonna point that out to you now. Second order was placed at this level here. So there's two little smaller levels. I like this one better, and it made more sense to me. But this one is actually the one that is currently holding. Um, and so it would have been better for me to hold at this one. I like this one better because it was a support level. This one is also a support. I'd like to look at this one better. And it was a bit of an unfortunate gamble, but there's only 35 pips between the two. And that's why I've actually considered entering another trade at that level, and not just because it is another support level, but the inside candle in the hint that this could push up. Why am I staying out of this out of entering again when this is looking like it could push up from here? Because of the FOMC statement. I don't want to be in too many levels, 1, 2, and 3, just in case that statement or the meeting minutes is negative USD. I don't want to be in too deep, and it would just be dumb to put in a trade right now when I'm already in on the negative side. Okay, so I'll wait for that statement and then to come out, and then I'll properly place my orders. Now, if this before the statement happens and this continues to push down, I may take out this pending order so it doesn't get executed. Uh, Also out of precaution. Okay, so let's go over the trades that I took yesterday. And these trades were pretty good. They were counter trend trades. So they looking at the support, the resistance here, and I saw the price going up. This is the trade I took that at the end of my session yesterday. I placed this trade live on my stream, and it was exited for profit only 30 to 40 minutes after it was placed. So the entries here, I can take off the candlestick so you can see where the entry actually was. Okay, so entry is right at the peak, and then my take profit. And what my take profit wasn't large, only at about 20 pips. And the reason why is because this is a counter trend trade. I didn't want to look for too many pips when it's against the trend. But it was a good trade, and I'll get into why I liked it. Well, I've already pointed out the support level, the resistance level here, and this big push, and I'm looking for potential candles up at that same level to see if this is going to, if this resistance level will be obeyed again a second time. So how do we do that? We look at the candlesticks. We want to see what's happening with the candlesticks because they can tell us a lot of what's potentially going to happen or what may happen. Again, it's still a prediction. You're still predicting that this may turn around here, but you're not just using that same level. You're not just using uh, a support resistance level by itself. You need to use it in combination with other trading strategies or techniques. And the one I have here is, reversal candle. I see reversal candle happening here, and I saw that this could be a good opportunity for the pair to push back down in a retracement or a pullback, and it did happen. Now, I was a bit late. I saw this candle here, and it started creeping back up during my stream. If you go back and watch the last few minutes of my stream, you'll see that I did take this trade at the very end, and I set my profit to 20 pips. It pushed back up, and why did I take it here? Because I also saw the whole number at 88. I saw the whole number and wanted to take advantage of that. So I entered right at the peak. It was a really good entry. Fell back down, hit profit. Now I could have held on to it for longer, but I don't care about that. All I care about is the 20 pips that I'm taking, and I'm happy with that. Okay, so next, uh, we did have this candle right after that kind of continued the trend. That's a pretty good reversal candle. And I'll tell you why, is because the wick, the closing solid in good strength and above the open of the previous candle, that's a really good indication for a trend continuation. I didn't take that, obviously, but because I was in on other trades. Now, the other trade that I took was on the UJ. On this one, also very similar. And this happened just soon after the other trade closed out. Uh, we have the resistance up at the top. It pushed back up. Resistance was hit again. Now, at this point, I didn't see any good candles. These candles in here are not great for reversal, although it could easily happen in that area. Didn't see it. Then this candle happened. Big push up, false push, it turned positive and then went negative. And the negative, so we have a big wick on the top, and the body of the candle closed below all of these candles here, not just the previous candle, but all of them, showing a really good indication for a short selling. So we're not only talking about just the candle itself, we're talking about also the level that it's at. The reason why this one is such a good trade is because we were at the 118 level, whole number. We were at the support, and we had the reversal candle on top of that. That's three confirmations on that to go with that trade. I looked for 20, I think I just did 20 pips on this one too. Yeah, just over 20 pips. Um, and it ended up going a lot farther than that. Ended up going 78 pips. Now I'm not going to be greedy. Just going to take what I can get. It's a counter turn trade, and that's why I only took the 20 pips. So you can see the trade better. You can see it here. Okay, now let's see if there's any other trades that I took. Uh, so I actually just missed this one. Not really sure why I wasn't watching very carefully. Uh, a break of the last swing, a inside candle, and push back down. Unfortunately, I missed that position. It would have been a good trade because it's not a USD pair. It's a CAD Japanese yen, so this would have been a pretty good trade to take. I just missed that in the last hour. So that's a little unfortunate. So that happened at 9 GMT, so exactly an hour ago, an hour and 6 minutes ago. It would have been a great trade, would have hit profit in 33 minutes. This is not something, this isn't past tense like, oh, I would have done this, I would have done that. This actually happened. This is a confirmed trade signal for me. Push up, wick candle, inside candle, bearish, enter on the next candle at 9 GMT, push down, counter trend, 20 pips. Okay, there is an inside candle here. It's a little bit tricky on this one because it did push back up. It did push back up quite enough for me to take another position there. So I would have stayed out of that trade. Now I talked about this trade the other day with the inside candle here and then the push down. I did recommend staying out of any positions on the Euro Japanese yen. It is an uptrend. I'm going to remove this indicator as I think it's distracting. I don't see any potential counter trend trades recently. I do see a trend continuation on the 4-hour on the upside, but the trend up has been a little sloppy. I mean, we do have decent levels. but recently on the it has been a bit of a sloppy trend up. Um, we do have this level that was had an inside candle, but that happened back on the 28th of December, so that's quite a few days ago. So nothing recently. All right, the odd USD, really good trade, counter trend trade. Actually, no, not necessarily a counter trend trade. This is still in the downtrend on the 4-hour and on the daily. Um, I'm looking at this, and if we go to the 4-hour, we can see that there were multiple indications for a bounce up. Eventually, it did start to move, but on the 1-hour, what I'm seeing, and what I also missed because I think I was asleep, was this inside candle. Really good one right here. Big push, powerful candle. When I see a candle like this, an inside candle right after, it's usually a pretty good sign. And the push back down. Now, was it enough for us, our 20 pips? Nope, it was not. Not yet. And I'm not going to take the position. I would consider it definitely. If the FOMC wasn't coming out, I would consider entering the trade right now at lower risk. Because this hasn't taken my 20 pips, I would enter where it is now and get in at a better price. Um, but FOMC is holding me back. This is with the trend. It's almost enough for me to take it because it is with the higher time frame. Um, but I'm gonna stay out because I'm already in on the US dollar CAD. I want to keep my margin available just in case this does go against me. Okay, the odd CAD. This is on the downside, but we did have recently have a pretty good counter trend trade here. Inside candle. Push down to the level, same the previous level that was actually hit twice recently. Here, here, and then again here. The nice push with the multiple uh, uh, bearish candles, inside candle, push up. Is profit would profit be hit? I don't think so. It'd be close. It'd be 18 pips. Now, typically, I would take 20 to 30 pips. Now, it depends on the pair, how volatile the pair is, what's coming out news. I'll usually stay in a 20 to 30 pip radius of profit. Now, I did take a small trade on the pound Australian dollar. That's actually based off of uh, some Rinko candles. I'm looking at trading some Rinko, and results so far have been pretty good. I'm looking for the trend to continue on the pound Australian dollar. The slope is looking pretty good for that. We have our levels. This is on the daily, and so I'm thinking that this is pretty good area for a potential continuation on the downside. I don't know how long I'll hold this trade for. It could be shorter, it could be longer. But right now it's looking okay. Uh, right now we just hit 10 pips on our Rinko chart, so I'll hold that for a bit longer to see what happens. Um, okay, back to what trades are good to take right now. Well, since I'm in on the UCAD, I do recommend taking this position. Now, with the FOMC statement, you got to keep that in mind. It's not statement, but the minutes meeting the meeting minutes coming out, um, that this could shoot down easily before that in the next few hours. But this is a good entry for a potential shoot back up um, on the trend side. That is probably my first pick for a trade, and my second one is, I think it is the odd USD. Even though this was an entry here, we could still get in at a better price. Now, if this continued to ride up, we would enter at a higher price and basket trade uh, this pair, just in case the trade went against us. But right now, definitely the UCAD is my trade of choice. So now going to my EA and what's happening with that. Uh, I am going to take it easy on advertising for this EA. I'm just going to show you the trades, what it's doing, because it is a part of my trading now. Um, we had this basket, so we had four trades, and all of them were closed out at this point. That was 50 pips profit. So 50 pips profit amongst all these trades closed out here. So that was 50 pips overall from this basket, and then 50 pips overall from these four trades as well, closed out here. Okay, and right now I'm sitting on an 8.68% profit. 13% drawdown is what it's reading, um, and no trades currently in. This is a live account. This is real. It's a 50 to 1 leverage account at Oanda. It was started back on November 17th, so I traded half the month in November. I traded the full month in December and received 5.22%, and then currently I'm up 1.21%. Now, typically, what will happen is I'll get anywhere from 1 to 1.3% profit on each closed basket on this account size, and I'm happy with that. So far, looking pretty good with the EA. So we're going to go back. I don't think I have much more to talk about today. Um, and just be careful with the FOMC meeting minutes coming out. Don't get stuck in too high risk of trades unless you plan to be involved in that move somehow. My recommended positions again are the UCAD long at 1.32, 1.33, 1.333. So at this point is going long. And you can see where my take profit is currently, which is at 1.34. So right at the whole number there. That's about 70 pips profit. So if you want to try to grab that, you can. There is potential that that might change once the FOMC meeting minutes does release or starts taking place. It could change and pushing down further, it could go up, and my take profit could change. It will change once I have a third order in. So keep that in mind. The next recommendation from me is the AUD USD, and currently where it is at 0.72678 for a short position. Take profit for that would be 20 pips because it is a counter trend trade. So right about where my mark is. Um, You can actually grab a few more pips if you like because it is a little higher currently. It'd be 23 pips total profit, but it's at 0.72443 is my take profit point. Now take these trades only at your own risk. These are my recommendations, but the FOMC is coming out, and that could change a lot of things. So if you do take these trades, take them at lower risk and with the idea behind maybe putting in a basket position. So let's take that real quickly before I go here. Um, so first entry. First entry is at 0.726559, and the second entry, where would you place that? Look for the next support resistance. Check it on the 1 hour, check it on the 4 hour, see where a good place for that second entry actually is. So on the 1 hour, I picked up a little bit higher at 73.421, but I decided to lower it based on what I'm seeing on the 4 hour, and that's where I'd keep my second position, at least my pending order, and that pending order is about 53 or 54 pips above my initial entry, and that is really close to the whole number actually up there. Um, and so if this goes against me and rides up, this pushes up. I have a pending order placed here with the potential for this to act as a support resistance level that may hold. Now you could place a pending order there, but probably the wisest thing to do is look at the support level, look at the number, and start looking for candlesticks that will give you hints that it this support level will hold. Um, and if you see any candles before that level, then that is potential for re-entry as well. Um, and risk no more. Then what I do is typically when I have a $2,400 account, I'll stick in the range of 0.02 or since I'm at 2,500, 0.03. Either one of those two. So if you have a $1,000 account, then I'd stick to 0.01 and do it that way. That's how I do my risk. Especially on a 50 to 1 leverage account. It will keep you safe, and it won't have you be freaking out about your positions because they're too high risk and you don't have enough margin. All right, let's see how our positions are doing. Be right before we go. Still creeping up on the UCAD, the odd USD. Looks like it's wanting to hold at this level currently. The Euro US dollar pushing up to that level I mentioned. We'll see if it holds. I want the candle to close above that that level, the 1.047 level. If it doesn't close above that level and the wick of the candle is below that line, that level, then this could mean that the resistance level up there is holding currently at that point in time. Doesn't mean that because this one candle closes below that level, doesn't mean that it can't continue to break up and push back up at that point. But you can see how price just in this one candle is behaving at that level. So with just watching how price is behaving on the 1 hour and seeing that it is playing, the body of the candle is playing with that level, you can see that already traders are watching this area, either for increased volatility or a point where they're taking their profits or getting out of their trades or potentially even entering trades. So it's not necessarily a place where um, either traders are deciding that they're going to push through or if they're going to decide to hold here. It's a place of volatility. Now, and the volatility happens with the candlesticks and how they behave, um, and what the majority decides they want to happen or what they think will happen. And once that takes place, then we'll see how price behaves at that level, and it will give us some hints onto what may happen next. All right, I think that's it for today, guys. So far, things are going well for me since uh, I had the big FOMC trade, taking lower risk trades, as you can see, and playing it calm and cool. Thanks so much for watching, and I'll see you guys next time. And oh, thanks, Andy. Uh, Good to catch you live. Thanks. I'm glad to see you here. Hope to see you again. And until tomorrow, I'll be back around the same time, probably in the bracket of 9 to 10 a.m. Eastern Standard Time. I'm not giving you guys a designated time for when I actually come in on the stream because my time constraints make it a little hard for me to give you an exact time. So um, I'll see you tomorrow. Thanks for watching. Bye.